What if you could spend 1 hour a day and become a profitable day trader? It is possible because of this checklist. It has a simple set of rules, and if you follow them, it removes all the guesswork and you trade with statistics on your side. And in the last month, this checklist has made me over $25,000. And if you're someone who just wants to check boxes in order to take a winning setup, this is for you. I mean, yes, it can fail, but only if you break a rule. I have spent years refining it, getting the biggest win rate and cutting all the losses. And in this video, I will break it down from A to Z. And if you are tired from jumping from one strategy to another, today is the day you'll finally stop losing. As you can see, in the month of July of 2025, I made just over $25,000. You can see all the trades I executed throughout the month, and I just had over 80% win rate. And of course, everything because I have a clean set of rules and clean checklist. And this in front of me is literally my playbook, which I will give you for completely free. All you need to do is stick till the end of the video and you're going to be able to get it for completely free. All key confluences that I use every single day in the market are right here, and I'm gonna run you through every single one of them so you can start executing nice looking setups exactly like me. Okay, so let's start with the step number 1, which is going to be liquidity sweep and delivery from fair value gaps. So what is liquidity sweep? Basically, liquidity sweep is in the market is basically a manipulation leg, some kind of manipulation that happens within the market that gets a lot of people stopped out and that gets a lot of orders going in the market, so big institutions can make big moves and basically make huge orders in the market. So let me make this even clearer. If you are going to, let's say, upside right here, and people can obviously see that we are going to the upside, you can see that a lot of buying pressure is in the market right here, so everybody is probably going to try to get into some kind of buy. So let's say a lot of people are going to enter into buys right here. Where are they going to put their stop losses? It's pretty obvious, at the most recent low. So right here is going to be a lot of stop loss orders, and basically institution markets knows this because there is going to be a millions and millions of stop losses. Of course, it does not care about your stop loss or somebody else's stop loss, but it cares about millions and millions of stop losses that is going to be resting right here, because that is like billions of dollars that are going to literally get claimed by the banks when they manipulate the market to the downside, sweep these lows, which means everybody is going to get stopped out, all these stop losses, and after that banks are going to have enough liquidity, so basically they're going to have opposite side of orders for them to enter into the market. So a lot of people are going to be selling right here because their stop loss orders got triggered, and banks are going to be able to buy into the market and to make insane profits. And basically we are going to use this to our advantage because we are going to wait for this manipulation always, so we can be on the right side of the market. Also, what a fair value gap is, that is basically a imbalance in the market, so everybody knows what it is. You can see this hole between these 3 candles from this week and this week, and this right here is basically a fair value gap, so reaction from that is always going to be very good, same as liquidity, but liquidity is going to be the most powerful one. So the next thing is gonna be fast momentum with no chop. So when we get those liquidity sweeps and basically reactions from fair value gaps in the market, we want to see market actually make a choice and basically let us know that it actually wants to reverse. And how are we gonna know that? Because there is going to be a kick in the volume in the market, and we are going to see those banks and institutions basically come into the market and make market go some direction. And this confluence is going to be used best on our entry model, which I'm going to explain you on the actual chart later in the video. The third confluence is going to be clear targets. So when we were talking about the example where we did a liquidity sweep, which is basically if we are going to the upside like this, we want to see some kind of recent low get taken out by the market like this. And nice thing that we want to see in the market is that this leg right here does not basically be a huge impulse in the market, but if it happens something like this where we leave a lot of these little highs in the market, and those are perfect spots to target because all of that is literally resting liquidity and resting stop losses above these highs, and that is going to be a perfect basically target for our trade once we sweep the liquidity and once we got a entry to the trade. This is always going to be the best target and those are little highs that I also like to call low resistance liquidity, but that is not important. What is important that you understand that we don't always need to target some kind of huge swing high or swing low. It can also be these little highs and lows, so we can quickly catch some profits and get out of the market. This one here is going to basically be the entry model because we want one clear gap. So let me break down what is this for you. So if you are making structure to the upside like this, and we basically get a sweep of some liquidity that happened in the market like this is basically where we are right now. So this liquidity sweep happened that I marked right here, and we are waiting for some kind of entry towards the upside, and we are going to always do that off of the last fair value gap in this leg, in this move, and we are just going to wait for the close above, and we like this to be a nice looking fair value gap that is singular, and that's it, like so simple. And the last one is premium and discount zone. This one is going to be a little bit complicated, but I'm going to break it down all the way for you. Alright, so this one is going to be a little bit harder for you to understand, but I'm going to give it my best. So on the screen right now we have a little uptrend going, so basically we have this little move happening right here in this box. But why did I mark this with green box and this with the red box? Basically we can imagine that the market was doing this right here and basically made some kind of like change of structure and just became a uptrend from the downtrend, and within this leg from right here all the way to the recent high, we always like to see the market pulling to the 50% range of this area. So this is going to be, I'm going to show you on the chart how the Fibonacci tool is basically looking, how we use it, how we set it up. But as you can see, from the bottom of this move to the high of this move, we always want to wait market to retest the 50% area so we can start looking some buys to the upside. And basically how is that gonna look? Look at this right here. We are probably a lot of the, like 99% of the time, we are going to make some kind of structure to the upside like this, and a few things are going to come each other. So we are going to get a liquidity sweep like this that is just below the 50% range, which is basically premium in discount. So this one is going to be in the discount because it is basically in the discount we buy and in the premium we sell. So that's all you need to know. You don't even need to know it, but you just need to know that we need to pull back all the way to 50% area for us to be able to basically get A plus nice looking setups. So you can see right here that we have a liquidity sweep right here, 50% right here. So ideal scenario is for us to pull back down here, sweep this liquidity, get some nice looking entry right here, and basically target to the upside some nice liquidities right here. So it is that simple, and let's see how does this actually play out on the screen right here. So we have liquidity right here, delivery from a fair value gap, so two confluences there. We have a 50% right here, so if the market pulls back down here, that is going to be a perfect example. And you can see right here market pulled back all the way to this area right here, retested a fair value gap, and look at this nice looking liquidity right here to target. All you do is literally enter longs. And now once you understand literally all the confluences there are in the market, you need to understand that this strategy is best basically to target to risk to reward. And what does that mean? That means if you risk, let's say $100 or $1,000, you need to basically target $2,000. So twice your risk is always going to be like the sweet spot for targeting. Then average win rate is going to be around 80 to 90%. Of course, if you take A plus setups that are picture perfect and like nothing is missing to it. And that means 8 out of 10 trades will be profitable, which is insane, trust me. Also guys, if you like the video till now, you can subscribe because it's completely free and it supports me and basically lets me know that I'm doing a good job for teaching you guys. And also you can like and comment if you want basically me to improve something on the chart. But before we get into live examples, you need to understand that if you take C setups, which means there is no liquidity sweep, no delivery for fair value gap, no momentum, no target, fair value gaps are not obvious, no premium discount, that setup will most likely fail because it is not a good setup. And like, why would it win when we didn't have any confluence? And said, If this setup even wins, that doesn't mean it's a good setup, it's just you got lucky and it won. But if you always take A+ trades, you are basically going to be on the right track and you are going to win almost all the time. Okay, so this is going to be a really nice advanced trade for you to actually learn a little hard example on the chart. So if you look on the chart right here right now, we can see that we had a huge push towards the upside right here, then we had a pullback, a kind of consolidation, and then we tried to push to the upside again, but we just couldn't because we didn't have enough fuel, which means we didn't have enough liquidity. So we just didn't have enough power in the market to push above these highs. So what is market going to try to do? It is going to need to take some liquidity, it is going to need to take some stop losses from the downside. So the obvious liquidity play area to the downside is this one, because it is the bottom of this move and it is just very obvious. So we can mark instantly that liquidity out like this. So we got first step out of the way. Then we also can check out this, we have a fair value gap delivery, which is going to be also amazing if we sweep this liquidity down here. Then the next thing we can mark out is going to be the 50% of this leg. And how do we do that? We open this Fibonacci tool right here that is going to be, it's called Fib retracement, and when you place it on the chart, it is going to probably look something like this. All you need to do is double click on it and literally remove everything except 0, 1 and 0.5, and you're going to get something that looks like this. So if we now go right here and place it on the chart, you can see that it is going to be really clean, and we place it all the way from bottom to all the way this high right here, and you can see that if we want a trade right now, market needs to pull back to right here. So that literally is perfect with our liquidity zone that is just below. So if we sweep this liquidity zone, we are also going to get tapped into this gap, which means we are also going to get in the discount zone of this move, which is down here, and that is going to be a picture perfect setup. All we are missing is some kind of volume when we sweep it, and a nice singular fair value gap right here that is going to basically lead us to the upside and just make us print money. Okay, so let's right now fast forward the market and let's see what happens. So you can see some nice volume in the market and we just swept it. So we are now inside a discount of this whole movement. So of this whole movement we came back to the discount right here, we swept the liquidity, we retested the fair value gap. So all we are missing is a nice singular fair value gap, and we are not missing it because we have it right here, as you can see. And basically we mark it out like this, and now all we are missing is some kind of basically shift towards the upside and close above this basically fair value gap. So let's see, will that happen right now? And we are missing it, and right here. So this candle represents, if you don't know how candles work, you need to check out my video on candles. Basically market went all the way down here and basically started rejecting like crazy and ended up closing just above here, above the fair value gap. What are we gonna do? We are going to enter the trade right here, stop loss below this candle, and we can target something to the upside. We learned that we can target some kind of closest nice liquidity, because that is always going to be the best target, because we are going to be in and out of market with the profits. If we target, let's say, huge profits like this, of course it can work out like a lot of the time, but sometimes it is just going to get back to the break even, or it can even lose because it is just a huge risk reward, and that just makes your win rate go down. So I personally like it to keep it down like this, and let's just see what happens in this example. So we get the first TP, I'm not sure if we get a second one, let's just see what happens. And market is just doing nothing, staying right here. Let's see if we are going to get it all the way up to here. And we actually did, so that is literally the magic of this strategy. So you could have targeted the 2.44R, which is a risk to reward, and you would have been out of the trade in like, let's see, you would have been done with the trade in like 20 minutes. Or you could have targeted a 5.4 risk to reward, and your trade will last like 2 hours, but you would get 5x return on what you risked, which is literally insane. Okay, so now the part that you've probably been waiting for is how you claim this checklist. All you need to do is go down there to the description. You're gonna see a basically free PDF link. All you need to do is click on it, and that is going to be it. Like, you're going to get it like that for completely free. Also guys, if you like the video, make sure to leave a subscribe, leave a like, comment something nice. And also, if you want to skip all the hard work and get to work with me one-on-one personally, you can do that down there by booking a call and having a talk to me. And maybe if you are a right fit for it, you can get to work personally with me. So with all of that being said, I'm gonna see you in the next video. Peace.